Welcome to This Week in Money. I'm Jim Goddard. Today, Morgan Report founder David Morgan kicks off our special report on silver about why he's optimistic about silver. Ross Clark from CIBC Wood Gundy examines charts explaining why silver might be a good investment. And Casey Research's mining specialist Louis James on how high-tech is impacting silver extraction. We talk to David Morgan right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome to This Week in Money, the source for market opinions. Sitting in for Phil Mackesy, here is Jim Goddard.
My guest is David Morgan, editor and founder of the Morgan Report. Welcome to This Week in Money, David.
Thank you, Jim. Great to be with you.
Silver is going to be the big theme for our show this week, and I think you've been looking at some of your notes and comparing where we are now and where things have been in the past, and you're very optimistic about silver, and maybe explain how you've been successful with it.
Sure. Well, it's been pretty much, I guess you could call it an obsession almost with me for many, many years. I was 11 when the coinage changed from 90% silver coins to what I call the Johnson Slugs in 1965. But at that time, I had no idea what I'd be doing for a living. But it did interest me because I was interested in money from a very early age and finance and how, what made things happen in the world, how a business starts and all that type of stuff. So silver is something I pursued for, a very long time and made it, pretty much my life's work. And so I've really dug down through all aspects and I have a pretty good feel for the market. And I think that we're at a point now where it's so underloved and so rejected by even silver investors of the recent past that I think we're at a point sentiment-wise where we're almost compelled to go higher in price.
Now, I know, of course, you look at more than just silver. You look at other commodities, zinc and PGMs. Maybe tell us about some of the success you've had there.
Yeah, we were very early. My younger analyst, Chris Marchese, who I know does the show quite often, brought to my attention and asked a good question, and was I familiar with what's coming up in the zinc world over the next few years? And I quite honestly hadn't really taken a very good look at it. And he said, well, the dynamics are very compelling. So we were, I think, one of the first, if not the first, to get out there in the analytical world and talk about what's coming up in the zinc world. And we had a stock pick because most of our members are stock investors, not futures traders. And, I kind of want most people to stay out of the futures market. And so we had a pick and it's been doing quite well. So that's been a success. And the other one, of course, is the platinum group metals, in particular palladium. We did a big report on platinum, palladium, particularly palladium, earlier in the year, and pretty much at the sweet spot, meaning that it was at a point where it was leveling off and had consolidated for quite some time. And it was a very, very good entry point, not so much for a trade, but for an investment. And so we've been successful there as well. So, our big, real good calls this year so far have been in the zinc world and the palladium market and platinum as well. But we favor palladium over platinum. We think palladium is a better buy. So those two have been successful. And, of course, the overall equities in the mining sector have actually done fairly well this year. The gold stocks are actually doing, as a group, pretty darn well this year, although you don't hear that. You don't hear it on, even in the mainstream media, you don't hear it at all. And even in shows like yours that are devoted more toward resources, you don't hear it that often. But has not been a bad year for gold, really.
And that thing that Chris Marchese discovered about zinc is 3 or 4 of the world's largest zinc mines are going to be shutting down in the next 2 to 3 years, and there is nothing major to replace them. There's lots of little zinc mines, but not monsters like this. And he said, sure enough, you can take a look at the price of zinc. It's slowly going up, but as everybody knows, you need zinc to make a battery. And what are we starting to make a lot of right now? Electric cars. So just
exactly.
On that,
we're top-down analysts. I mean, we look at all aspects of the market and all factors that interplay into it. And we do our best always. We don't get it right 100% of the time. No one can if you're realistic. But, yeah, we're pretty proud of that, really. And I, again, tip the hat to Chris finding that early on. And there's been other analysts that have done it, bank analysts since then. But, we try. We're looking at everything. I mean, I shouldn't say everything, but certainly don't do the agricultural commodities or anything else. But even do pretty much mining. If it comes out of the ground and you dig for it, we pretty much look at it. Copper, rare earths. We did a lot on rare earths early on. We kind of kept away from that in the last couple of years, but we've covered the gamut. So certainly just for the listeners, to know that the Morgan Report covers more than silver and gold. Although that's what we focus on primarily, we certainly look at everything in the resource world if it's mined.
And one of the reasons for palladium's big rise has been the ability to use palladium instead of platinum to make catalytic converters for cars. And China now has decided their air pollution is so bad, maybe we should put catalytic converters on our cars.
Amen to that. I can't emphasize what you just said more strongly, having been there. And in fact, I just connected with a Chinese gentleman here in town and asked me about, what date I was there in Beijing. And I told him, and he said, oh, it wasn't that bad then. And it wasn't, relatively speaking, it was bad, but it's much, much worse now. So yes, there's a huge push toward cleaning up their pollution over there. And of course, that's a big group, big grasp for the palladium market.
Yes, the Chinese have discovered the air pollution there is so bad. Their average life expectancy has gone down 6 years because of it. Now that is a shocker.
It is.
So, David, taking a look at silver, is this a good time to get into silver, or should people still, like you said, they've been avoiding it? Is this a good time to maybe lift the blinkers and take a look?
Very much so. The commodity silver is at a price point where it's basically lower or near the price of production for most primary silver miners. So that means that you, in several cases, really can buy silver over the counter at your coin dealer or from your bullion dealer on the internet for a price that's lower than a manufacturer or a silver miner can make it and pour it into a silver bar. So that is with any commodity, be it agricultural, mineral, whatever. If you can buy a commodity at the price of production or lower and you have some patience, you're going to make money in the long run. So certainly it's a great time to get in the silver market, but don't have the expectation that the day after you buy it, the market's going to immediately start higher. But will certainly get higher at some point. In fact, I think we're not that far away from it. But nonetheless, it's a great time to be accumulating at this point in time.
Is the world supply of silver adequate for demand, or are there shortages?
Well, shortage is a word you hear around silver often, and it really ticks me off because supply and demand have to meet in all commodities every year. If it's corn or if it's wheat or if it's silver, supply and demand meet. And you hear the words, well, there's a silver shortage. There has been shortages, and I want to put the word shortage in quotation marks, of product. There's been shortages at the mint, meaning that there was more demand than the mint was able to meet. But that's a specific product. That isn't a shortage of silver. So I want to be very specific. And, of course, during the 2008 crisis, there was a shortage of a lot of retail product. In fact, almost any retail product. Shortage of government-minted coins, silver rounds, which are privately minted coins, silver bars of almost any denomination. The only thing that didn't have a shortage of it was commercial bars, which is your 1,000-ounce bars. But still, that wasn't a silver shortage. It was a shortage of silver product, retail product, and certainly it existed. And I'm not trying to play a semantics game. I'm trying to give a feel for the market, because people that just do a cursory, hour-long read or a couple of videos on YouTube and don't really dive into the topic very deep have a misimpression about the silver market. So there's never really been a shortage of silver itself. Yes, there has been shortages of certain product. As far as the overall amount of silver mined, it's been on a continual increase from roughly the year 2000 to present day. And that will actually continue for a few more years. In the book that we're writing, and Chris Marchese, again, is doing a great deal of the work on that book. I'm doing the editing and writing a few of the chapters, and David Smith, our senior analyst, is contributing as well. So it's obviously a group effort. But there will be a point in peak silver, and it's not that far away. So, silver investors out there, don't get discouraged that the production of silver will continue to increase the next few years, but it's just a few more. And after that, then you're not really, and it's price dependent, let's be honest here. I mean, if the price of silver is up to $100 an ounce by that time, certainly the peak silver date could be pushed out a little bit. But nonetheless, look at, any commodity, but we'll just talk silver because that's our specialty and that's the focus. But, the grades that we were getting 100 years ago, we were getting maybe, 70 ounces a ton, or, 10 ounces a ton was like a low grade silver mine going back 100 years. Now, if you get a couple ounces a ton or something, it's like, oh, we got a silver mine. Well, depending on the price, maybe you do, maybe you don't. But, nonetheless, the point is that the depletion of the low-hanging fruit is true across the board in all the commodities, the gold world, the silver world, the oil world, just about anything you care to name. I'm talking about in-ground substances. I'm not talking about above ground, where the yields keep getting higher and higher due to genetic modifications.
More with David Morgan next on This Week in Money.
Always consult your investment professional before making any investment decision. More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back to This Week in Money. My guest is David Morgan, editor and founder of The Morgan Report. So silver prices are expected to go up. Another analyst I talked to, they've been kind of hanging around $20 an ounce. He said he wouldn't be surprised to see it at 30 by the end of the year.
Well, that's great. I think I said that myself like in January, and then I backed off. I like to be right, and, I've been more often right than wrong when I do the 1 year forecast, but I'm much more accurate for my members where I get to see more data and I can forecast out, 2 or 3 months. But regardless, I play that game because I'm asked to. I have been saying for quite some time, Jim, as you know, because we discussed this on the last show that we did together, I'm looking for both gold and silver to get above what I call the breakdown point. And that's 26 in silver and about 15.50 in gold. And I think that's pretty easily achievable by the end of the year. And once we get to those levels and we go through those levels, and those levels will probably be tested. Once those levels hold, then that becomes a floor again, and it was for a long time until it was breached to the downside. Anyway, it becomes a support level again. And once that happens, then to go from 26 to 30 will actually be pretty easy, meaning there's not a lot of supply between those two levels. And that's true of a stock, true of a commodity. It's technical work. It's not any magic science or anything. You just have to look and see, and you can determine pretty easily if there's a lot. In other words, if you're looking at a stock, for example, well, these are the same numbers, but if there was a lot of volume and a lot of time between the $26 and $30 level, that'd be what we called a lot of overhead resistance, meaning there's a lot of stale shareholders and a lot of stock out there held by a lot of different people that really are tired, and when the stock price gets between that levels, there's a lot of supply. In silver, that's not true. If you look at the chart, there's not a lot of supply between the $26 and $30 level. So I'm certainly not going to argue with this. Probably one of the better analysts. I know that who Tom uses for their analytic work, and I know if it's Ross, he's very good, and I'm not going to argue with him. He's near the top of the list as far as who I pay attention to on the technical side of things. And I really don't read too many other guys technically because I don't really like to be influenced. I like to do my own work there, but there are those that are good at it, and there are those that are, not so good at it.
We've all seen those ads on TV where some guy yells at you, "Come on down, bring your scrap gold, and we'll give you cash." Well, is there such a thing as scrap silver? And is there a market for that?
Absolutely there is, and they don't really mention it, but what really is fascinating about the scrap supply of silver is that almost all your gold is scrap silver. And wait a minute, what did David Morgan just say? He said most of the gold is scrap silver. But think about it. If you look up on the internet, don't take my word for it, do your own research, but determine what, 12 karat, 14 karat, 16 karat, 18 karat, 22 karat gold is. You'll see it's, part gold, part silver. And what you think these guys that smelt this stuff down throw the silver away? Heck no, they don't. Of course they recycle the silver. So certainly you can go in any scrap dealer and just bring in pure silver, and of course they'll buy it from you. But a lot of the scrap gold contains a great deal of silver. It's true in the smartphone market. I mean, years ago, I would use the cell phone as an example that it wasn't worth the power and energy to recycle it, because the amount of silver was so small. And that was actually a true statement at the time, but that was well before the advent of the smartphone. And the smartphone's been around now for a long time. And the smartphones use gold. And because of the amount of gold that are in the smartphones, they are worth smelting down. In fact, if you take a whole bucket load of smartphones and smelt them down on a ton basis, you get about 4 grams per ton, which isn't a whole lot, but some gold mines are running at 1 gram per ton. So in a smartphone world, you're getting like double or quadruple the lowest grade gold mines that are in production. And all your mining is, something that that people throw away or have to get the newest one or whatever. You know what I'm saying? It's called e-waste, electronic waste. In fact, there's a company in Vancouver that's just a little beyond the startup that I offer to my members to do a private placement on regarding this e-waste situation, because it's very lucrative. I mean, mining something above ground, it's really not mining. I could consider it mining, I suppose. But basically, recycling electronic waste is a very lucrative business that not too many people are that aware of.
And silver, too, is an industrial metal. It's not just used to make jewelry or to invest in. They use it. It's a very good conductor of electricities.
Absolutely. Nothing conducts electricity better than silver. So anything that's electronic or electrical usually uses silver in it. And it's indispensable. And, people talk about, well, what about substitution? And you can have substitution, the areas where it's not pricing elastic. So let me explain that a little bit. Silver is pricing elastic on the demand side for electronics, meaning that there's no real substitute for silver. If you want to substitute silver, you can use gold, platinum, palladium. You can even use this graphene, which I don't want to get into. I wrote about in the Morgan Report, but all those substitutes cost more. So in economics, you're going to build the best product at the lowest cost to provide the best output that you can. So there isn't a substitute for silver in electronics. Now, if you go into a high-priced silver environment, what are you going to do with silverware? What are those substitutes for silverware? Certainly you can use flatware, stainless steel, or jewelry. If jewelry goes real high, what's interesting about the jewelry side of things, though, is usually if silver's going sky high, so is gold. So it doesn't affect jewelry as much as most people think. I'm chuckling because I study this market so carefully. So a lot of people, what actually happens, if gold goes sky high, instead of buying gold, they'll buy silver jewelry. So it doesn't affect the jewelry demand as much as it might, or you might think, although it is price elastic on the jewelry side and the silverware side. But electronics, price inelastic. It doesn't matter. Your, flat screen TV, your refrigerator, your washing machine, your iPhone, iPad, whatever, that is not going to be affected as far as, are you going to substitute something else? There's nothing else to substitute.
Remember those ads for Porsche? There is no substitute.
That's been a while since I remembered that. Thanks. Yes, I do.
Yeah, my Porsche's that old. What about recent silver price behavior?
Well, I'm going to go back to the peak back in 2011. It seems like such a long time ago. It's been over 3 years, and, we held in the 30s for a very long time. I bought silver in the 30s. I didn't buy anything above 35, but I did buy some in the 30s, and I bought some in the mid-20s, and I bought some in the 20, and I've even got some below 20. But it's been consolidating, basically, for a very long time, and I think we're near the end of the consolidation. I do agree with whomever you interviewed recently that we're going to see maybe not 30 by the end of the year, but higher prices by the end of the year. And, on a percentage basis, if silver goes from, 20 to 22, that's a 10% move. It goes from 20 to, say, 26, that's like a 30% move, which is a pretty good move. Gold's been doing, pretty good this year for, from the beginning of the year till now on a percentage basis. Certainly not enough to get the gold bugs excited or, really, relieving some of their pain, let's say. But nonetheless, the markets are still very oversold. And I just don't see a big, huge, smashing that's going to take place in the precious metals markets again. Could happen. I wouldn't rule it out. I'm not to say that I know the future. I don't. But I really think the worst is behind us. I think better days are just ahead of us. I think by the time the end of September rolls around, which, looking a month and a half from now, we're going to see the fact that gold and silver basically have made their bottoms.
And of course, people keep making this dire prediction that the equity markets are about to have a major negative correction. And when that happens, people tend to run to gold and silver.
Exactly. I mean, gold especially, it's the most weighted asset to the equity market. And that's gold, not gold stocks. And that's just a fact. So you're right. And once you get, money to move, which it's certainly moving into the stock market presently and has been there for quite some time, it can move fast. I mean, we've seen these markets really take off and go. And I'm not forecasting that, but I think initially once you saw the equity market start to sell off, you're right. We'll see movement into the gold market. And you might see if it was a real huge sell-off. You probably see gold sympathize with the equity market for a short time. And the reason for that is there's so much paper gold out there. And these are markets that move pretty much all at the same time, whatever direction the major markets are moving, meaning the equity market. But that, again, is short-lived. And then what those fund managers and money managers do is they go to what they know, and that is gold.
Are there any technical indicators from silver charts that could foretell a rise in the price of silver?
There are. I mean, a lot of guys believe in different things. The MACD, for example. There's other indicators, but I've been through so many technical schools, and I know so many certified technical market analysis types that have the designator. Yet, I've learned quite some time ago for the trading that I do to let the market tell me. And what I do is I let the market break a certain level. And if that level is broken to the upside or even the downside, then that is indicating to me if I should, pay attention or not. And so that's how I've done it. There's a book on it. I won't give it out, but, and there's all kinds of, there's like our modern age. I mean, it's not the information age, it's the over-information age. And so I basically do it on price and volume. And I know almost all the technical indicators. In fact, I've forgotten some of them. It's been, because I know they're not that meaningful. I know what is meaningful. I know what works. I'm a very big believer in doing what works. I'm also a very big believer in keeping it simple. And price and volume are the main things. Of course, there's levels that are important, and those are what, the level thing is an art form. I can't really teach that. I do show it to my members. They look over my shoulder and I make a video and I show the chart and I say, here's the level I'm looking at. And one gentleman wrote me and says, well, what about this level? So-and-so says this level. I'm not going to argue. I mean, it's very close to my level. It's an art. It's not a science. But if silver is to break through this level at this time and this type of volume, then here's what I'm going to do. So that type of thing. But there isn't, in my view, any perfect technical indicator that's going to give you 100% reliability. And certainly my method doesn't give you 100% reliability, but it certainly keeps you from making big losses. And trying to pick bottoms is very difficult. That's why I make the market show me that it's ready to move up before I put something on, put a trade on, because it'll save you. If you're expecting that this is the bottom and it goes down from there, you can rack up losses very, very quickly. And if you had a price that it had to go through to the upside and say, that's when I'm going to get in, then you won't lose. And people say, well, geez, you could, if you got the bottom, you would have made more money. And the answer to that is yes. But you also, if you are experienced like I am, you haven't lost any. And the biggest thing in using leverage is to not lose, is to win, not lose. So there's techniques that are different in trading that you might use in, let's say, buying a stock, for example.
David, could you maybe remind listeners where they can find your information?
You bet. themorganreport.com on the internet, also on YouTube at Silver Guru, and on Twitter it's at Silver Guru 22.
After the break, Ross Clark from CIBC Wood Gundy on This Week in Money.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
This Week in Money is archived online at TalkDigitalNetwork.com.
My guest is Ross Clark from CIBC Wood Gundy. Welcome to This Week in Money, Ross.
It's nice to be back with you.
Today we're going to be discussing gold and silver, and especially the ratio between the prices of the two precious metals. Ross, what's going on there?
Well, what I noted here of interest in the last week or two, and I don't do a lot of trading in the silver market, but there are some times that there are relationships that kick up with signals that warrant, from my point of view, taking some price action. So I just wanted to get into that, and we can take a look at how both the gold and silver markets are looking at this point. As you know, we've been talking about the fact that precious metals were down for now 3 years from their highs, and that this would be the classic basing period in that 3-year window. And so far so good. The support levels are holding here. The gold has bottomed out, spring of last year, and then again in December and at the end of May, and had 3 pretty decent rallies off the bottom, but hasn't really gained a lot of traction so far. Silver's been a little more lethargic. It just keeps going down and testing that 18 3/4 to $20 range, and just flirting around in a more of a wedging and a tightening formation that we're seeing even in the gold market. But we have seen during this process that one of the things that I look at is the ratio on gold silver, which right now sits around 66. It's not extremely high, it's not extremely low, and I like to look for the rate of change as it's moving. If you get into a methodical move, then the markets can move for an indefinite period of time, but it's when they become excessive that we tend to see turns. And whether that be on a daily basis or on a weekly chart, it will then warrant different types of positions that one might want to take in terms of the time frame of that position. So last year, when we came into June, the ratio on the gold silver had been moving just significantly against silver for pretty much since the top of the market, and the weekly relative strength index at that point got down to absolute extremes that we would expect to see around major bottoms. Usually happen about a month or so before the bottom, and that's what happened in June, July of last year. Now, coming off the bottoms, the first couple of rallies that we've had, the one into late August last year, the one off the December low and into February of this year, and again the one that we had in June. We had silver outpacing gold significantly enough that it was showing just too much euphoria as far as the complex was concerned. And the thing I don't want to see here is I really don't want to see silver take leadership off the bottom. Because when we look back at the good bull markets, the ones that have lasted 3, 4, 5 years, the first 1.5 to 2 years of those moves, silver has been a bit of a dog. Sometimes it's participated in the move, sometimes it's actually eased off to slightly lower levels if gold has been moving up more because of a monetary push behind it rather than an inflationary push. And so when you get more developed into the trend and silver starts to come to life and, the poor man's gold starts to really come to the forefront, that's usually the tail end of the move. And if you've been running for 2-3 years, you might get, 6 months out of that final run. If you've only been running a short period of time, it's that run in silver that tells you it's time to be taking some money off the table. So in in the last couple of weeks, as we went up into the June high in that rally in precious metals, the ratio that as I look at it on gold and silver, the relative strength index, and this is just a matter of an internal measurement looking at the 14-day window and how quickly are things moving. That last week of June, it got to an excess, and we went through the month of July with most of the miners and the precious metals stuck into a trading range, just setting up for what could be the next move. And the last week of July, early part of August, we've seen that the relative strength has now gone to the opposite extreme. We're in the position where we should be looking for the miners in particular and silver to have a good little run-up off this oversold condition that we're starting to see, and we should get some life out of here.
I was told traditionally the precious metals tend to do better in September and October.
Well, yeah, very much so. If you look back over the last 15, 20 years, and I've got a chart that people can send in for, I show that the XAU during the full period of time and clearly outline that September-October window in there. And last year was really the year that we had probably the poorest performance. It was a good year, but it didn't stretch right out through September and October. It actually topped right on the last week of August. But this is the sweet spot, typically from the early part of August into that September-October time frame. Now, quite often it bottoms out earlier than that, but this is the point at which you expect to see the real life in that marketplace. And if you look at the mining indices, that the GDX in the U.S. or the XGD in Canada, they have formed very nice inverted head and shoulders bottoms. And what that means is that they had original lows last year in the spring, went down and made lower lows during the winter, and then in May they had lows that were similar to what had been seen last summer. So you've got this effect of a rounding bottom or a head and shoulders, and both the U.S. and Canadian indices there are sitting right around their necklines at this point. So that if they pop to the upside, if there's some life in here, then we get some technical measurements that would produce moves that should be a minimum of a 25 to 30% move in the broader indices within the miners. And so you're going to have your star performers, you're going to have a few laggards, but it should be a pretty good move. And as you know, I've been looking at a catalyst point here in terms of resistance levels in gold this year, the sort of numbers that have come down consistently that we've needed to get through to say that the move is actually underway. So far we haven't clicked in on any of those. They've come down fairly tight. On an intraday basis, we've been through a few times up at the 1346 level. We were there briefly, then again a few weeks ago. And I'm now looking at 1322 on the gold market as the catalyst point, where I would say that technically it's in the process of breaking out of this 1 year consolidation that we've had in this space. And on the upside, reasonable targets for gold, I think, would be in the 1430 to 1470 range. Silver, I get a $26 target if it moves along with the gold market. If things become excessive, you could have a $30 reading on the silver. If we get that type of thing, we'll probably then see the relative strength index give a pretty solid sell signal. Not just on the dailies, but we'll be watching the weekly charts as well. Because if we can get if silver outpaces in a significant way off the bottom, then that would be, as I say, a concern for me, because that's more ending action than the initial phase of a move.
Do gold and silver do well in September and October? Because traditionally that's when the equity markets will take their big downturns.
Oh, yeah, and we have enough indicators out there on the equity markets right now to say that there's some distribution going on. We had a hard sell-off into the latter part of July, first week of August. Got some pretty good oversold readings. You got the Dow all the way down to its 200-day moving average, and it's natural here that the sentiment readings, which had been so bullish and turned negative. You can see that in the put-call ratio. The put-call ratio went to its highest level a week ago, dating all the way back to 2012. So we've definitely had a large number of people out there looking to buy protection. And that type of an extreme usually is seen around an interim low, and it's enough to give you a support in the market and a lift, because it's a great indicator of just the anxiety that people have. So what I would be watching for, we talked about the seasonality here as far as the equity market is concerned in midterm election years. If the rally that we've had coming off the low, these lows of the last week and a half, if it runs out of steam and rolls over, then I think that 4.5% to 5% break that we had in the S&P and maybe down to the 200-day in the Dow, those levels could easily been taken out, and you could see something more in the magnitude of a 10% break off the high.
Boss, is there a website people can go to take a look at some of the good work that you do?
I don't have a website that I can put up, but I would suggest if people want to send for some of the charts, they can email me at Ross Clark, that's ROSSCLARK, at shaw.ca, and I'll be happy to send off some PDFs for them.
After the break, Casey Research's Louis James on This Week in Money.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
This Week in Money is archived online at TalkDigitalNetwork.com.
My guest is Louis James, metals and mining specialist from Casey Research. Welcome to This Week in Money, Louis.
Glad to be here.
Well, let's get into your mining specialist mode here. Where do we get most of our silver from? Is that a concern right now? Do we have lots of silver available?
Well, there's two answers to that question to keep in mind, and both are very important. There's where it comes from in the world, and that hasn't really changed much for 500 years. We know where the big natural endowments are and have been. And, Mexico continues to be an enormous silver producer. Peru and the Cordillera there has a lot of silver resources going farther north and south. But the other side of the coin, though, is that silver is a byproduct from a lot of large, low-grade mining operations, particularly big copper porphyries often have gold and silver associated. And they're so big that even though the silver grade is pretty small, negligible to the really economics of those operations, the amount of silver produced is quite significant. And that's worth remembering for silver bugs on both fronts. You have possible fluctuations in the price of silver due to this other production and its byproduct status, and you've got possible fluctuations due from where it comes from and the political risk associated with those jurisdictions.
And where is it riskiest? If you're investing in silver, where do you have to be very aware of what's happening on the political scene?
Well, I guess it depends on the individual investor, because just because you're a silver investor doesn't mean you're a big fan of internationalization and taking risks in far abroad places. There are people who focus on projects in the U.S., for example. In Canada, there's still plenty of silver mined here. And Mexico, though they speak Spanish, it's still North America, and it's regarded as a relatively stable political jurisdiction. It certainly has been this mining sector until last year when the tax regime changed. So let's talk about that real quick, because Mexico is such a big silver production jurisdiction, mining jurisdiction. The new tax regime was unexpected, it was unwelcome, and it is bad news. There's no dodging the bullet on that one or mincing words. It's bad news. That said, it was done within the law. They didn't completely rewrite the rules or whatever. They just changed the tax percentages. And the super tax on silver and gold and precious metals, that one may actually be challenged in court and may be thrown out in time, but for now it is the law of the land. So what I'm saying is Mexico hasn't, in general, turned into a suddenly bad place to do business as miners. You can still permit projects there. It's still a jurisdiction that wants to see mining go ahead. It understands that mining is actually one of the mainstays of its economy now. It's very important there, and they don't want to kill the goose that lays the golden eggs. Now, of course, the average politician doesn't really know how much goose you can take without killing the goose. And so what they've done is likely to be very bad for more marginal projects. So if you're going to invest in silver in Mexico, you want to pick high margin projects. You want to look for size and grade and the kinds of things that make for a high margin operation. And those will be fine. They'll pay higher taxes. The cost of mining has gone up in Mexico for sure, but it's still a workable jurisdiction. Does that make sense?
Right, but you have to get a good return because this tax takes a lot of your money out.
Right, exactly. Right. So if you had something that looked okay, or maybe it was a low-grade heap leach operation that was going to survive on slender margins, maybe relook at that. But if it's a high-grade, big fat honkin' vein system, they should be okay. And on these specific to silver front there, another jurisdiction worth mentioning is Peru that I mentioned earlier. Obviously, there's silver up and down the Cordillera, but Peru seems to be really driving things in the right direction. They're battling illegal mining, and that puts pressure on the government to enable legal mining because they depend so much of their economy on mining, and they know it. That is mining country, and it's one of the top fountains of foreign direct investment as well as taxes within the country. So they're very aware, but they want clean, environmentally sound mining, or at least as environmentally sound as mining can be. And they've gotten quite serious about this. So this is actually good news for international operators, Canadian juniors, for example, that adhere to modern standards of mining practices.
Of course, in BC, a black eye for the industry with a tailings pond collapse and possible pollution of water around the area, although testing has shown the water isn't all that contaminated. But still, when you see...
big or small, when something like this happens, people worry. And this gets to a conversation far beyond silver. Yes, that was bad news. Obviously, it's going to scare a lot of people. It's going to make things more difficult to permit. And actually, rewinding our conversation slightly, there was a tailings failure in Mexico too, less than a week later. I suspect that the situation in BC will be harder than it will be in Mexico. They're more aware of how much they need mining, and a lot of people in BC would be quite happy to see no mining in BC.
And, of course, BC is really mining central for the entire world. Vancouver is where most of these mining projects get their ideas from, and they put their brains together here.
Yeah, but that's corporate offices.
Yeah.
It is funny, though, for reasons of history, that you've got so many mining companies, especially the juniors, centered around Pender and Howe streets in Vancouver. But actually, many of them are exploring all over the world, and relatively few of them are working in British Columbia itself. I think one reason for that is the still unsettled, conflicting land claims with natives. And, it's not fun to develop a project and then have some new band claim that they own the land or whatever. So there aren't that many exploring BC. There are some, and some notable successes there. And now a very unfortunate situation where, this is one of those things where there is always some risk with everything. There is risk with going to the doctor. There's risk with getting behind the wheel of your car, driving to work in the morning. There's some risk. You can't stop going to work because there's a risk involved in getting in your car. And our civilization can't stop mining because there will be some mine accidents sometime. If you do that, it's the equivalent of quitting your job, or civilization-wise, it's the equivalent of going back to the Stone Age. Our civilization requires metals, so there will be mining. It's just a matter of where. And if it's not going to be in BC, it'll be in other places.
Does high tech make a big difference now?
It can and should and will more in the future. I think one of the areas that high tech is making a big difference in mining is in the human safety factor. A tailings dam is a tailings dam, and that really hasn't changed a whole lot for a while, but I can see new technology that might. But now you'd have remote operated vehicles operating in mines, and you can lower costs by doing things. Opening up a larger stope, say, then would be safe to send people into, but if you could send robot scoops in there, then you don't risk any persons, and you can achieve lower costs. So yes, high tech is impacting the mining business.
I know in Mexico, they have a big problem with water deep down, and because they have new high-tech pumps, they can go deeper and recover more silver.
Well, there's always the pioneers out there doing new things. And as an investor, one thing I learned from Doug Casey, and I would encourage your listeners to pay heed to, is that the first pioneers are the ones who take the most arrows. And it's all great to invest in a new idea and be an angel investor if you like, if you really believe in the good outcome for mankind, if you will, of some new technology, or if you really believe that you're going to make a ton of money, that's fine. But understand that if you're going in first in some of these new technologies, your team is going to be the one discovering all the problems, and many of them can be fatal to your financial outcome, even if the technology ultimately proves successful.
Is there a big push to recover silver from the ocean? We know there's all of these metallic nodules on the ocean bottom. I mean, off Japan, they have found rare earth nodules, and they say they're economically recoverable and they can make money doing it. Are there silver lumps laying there on the bottom of the ocean to be recovered?
Well, a lot of the, first, there's dissolved metals in ocean water all around the world. And all you need for that kind of extraction is energy. It takes a lot of energy, but you could do it. All the mining, hard rock mining in the world could go away if we had enough energy to just process the seawater and get the metals out. But that's for farther down the road. What you're talking about is ocean floor mining, and the prototype of this, developed by Nautilus Minerals, was the VMS-type deposits, the black smokers underneath the ocean surface. Instead of waiting for those to get buried by hundreds of meters of stone and then over millions of years show up on the surface of the earth all twisted and faulted off in different ways. Why not go to where these things are forming in the ocean bottom? It's an interesting idea. And I bring this up specifically to your silver question because those deposits tend to be polymetallic in nature. They are often base metal and precious metal rich and tend to be pretty high grade. So I don't think it's a silver-specific technology, but it's certainly something that is relevant to silver mining. There's high-grade potential there and relatively low-cost mining if it works. But it's one of those things where anytime you do anything related to water and the oceans, there are very large and well-funded environmental organizations that don't like it, and you have to deal with that.
Yes, Greenpeace will show up anywhere and everywhere. Louis, is there a website people can check out to find out more?
Sure. Our main website is caseyresearch.com. That's CASEY, like Mighty Casey at the back, caseyresearch.com. And there's a free publication we have called the Daily Dispatch, which I would encourage everybody to sign up for. And we cover different market sectors every day of the week. And we do metals and mining on Monday. And my team puts out usually original research on whatever is of maybe not the utmost important, but whatever is interesting and important that metals investors should be thinking about these days.
And once again, just to remind you, if you're interested in the PDF that Ross Clark drew up for us to explain his take on silver, you can contact him at Ross Clark, Clark spelled C-L-A-R-K, at shaw.ca. Thanks to our guests, David Morgan, Ross Clark, and Louis James. And thank you for listening. I'm Jim Goddard. For Phil Mackesy, we're back next week with more This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.